The fundamental part of needing capital, first of all, hasn't changed at all, right? In fact, still a lot of the capital that is constant is investing on people, even though we have developed hardware and other things that require a lot of capital, but still majority of investments are going towards software, which means it's all investment on people. I think that is complete constant in the last 30 plus years that I've been working in this industry for sure. And we talk about technology helping us and all of that, but it's people that develop technology. It's people with talent that develop technology, Edgar. And I think that nothing has changed in that.
Welcome to the latest episode of the Raise&Exit podcast. And today with us, we got Girish Muckai. And Girish, by the color of his hair, has more than a few years of experience. So he'll be able to go and share not just from what he's doing today as the CEO of Rockfish Data, but what he's gotten done throughout his career in both raising capital, seeing a lot of capital being raised, probably seeing a lot more capital not being raised, but also raising different forms of capital. So Girish, today we will be going and diving into not just raising money for businesses, but also raising money for other purposes. And I will be asking you some questions about that. But that is still not enough justice for you and your background. Girish, please introduce yourself a bit more than I did. Over to you, my good sir.
Edgar, thank you. It's a pleasure to be here. Again, I've been around the block a while, as you mentioned. I co-founded Rockfish about 3.5 years ago from technology that came out of Carnegie Mellon University. Two of my co-founders are faculty members there. Before that, I was with two other AI startups, one in the conversational chatbot area and one in AI ops or IT ops area. And before that, most of my career was spent in telecommunications and networking and cable and wireless, the plumbing that makes us all connect in today's society. I was with both sides of the aisle, if you will, in telecom carriers like Pacific Bell, which became SBC Communications, and AT&T later, and Jio, which is India's largest, one of the largest telecom operators in India, and I was helping them with the partnerships here. And then also with vendors that made equipment, software, and all the other things for making our telecom cable wireless infrastructure work. Also spent more than 20 years volunteering with nonprofits. And as you mentioned, raising capitals, I've spent a considerable amount of time as a volunteer raising money for a number of nonprofit organizations as well. And so just being fortunate to witness how our world has changed, our technology landscape has changed, and how we work and play and do everything else in life.
That's fantastic. Girish, thank you. As listeners and viewers know, the tone of Raise and Exit podcast is to really give companies, individuals, founders, private equity firms, venture capitalists, information or insight that they might not need for months or years. And something that having you on the show gives me an interesting perspective on is you have gone and navigated through a lot of technological shifts that we've gotten had in our society over the past few decades. But those shifts have also driven how people think about raising capital, how they justify investments. What is something that you've noticed has not changed? And it might be that everything has changed, but is there something you've noticed hasn't changed over your decades of experience?
Yeah, I mean, the fundamental part of, needing capital, first of all, hasn't changed at all, right? In fact, still a lot of the capital that is constant is investing on people, even though we have developed hardware and other things that require a lot of capital, but still majority of investments are going towards software, which means it's all investment on people. I think that I see is complete constant in the last 30 plus years that, I've been working in this industry for sure. And, we talk about technology helping us and all of that, but it's people that develop technology. It's people with talent that develop technology, Edgar. And I think that nothing has changed in that. We may leverage AI, we may leverage other tools, we may leverage various other software to make us a little better, but eventually the ideas are conceived by people, the ideas are executed by people, and the ideas are verified by people so that it is by the people for the people.
Oh, I love where this is going and that grin on your face because, we saw the death of the hired employee being projected in 2025. We saw the number of software engineers, computer scientists declining. And then you go and have a record Q1 from Anthropic. OpenAI is growing. You got models coming out of Asia. And where are the people going? They're going back to those companies, right? We got the dip and now we got hires coming back up. And it's exactly pointing to what you go and have, which is the people. So with that in mind, and I think there's a friction here, right? There's a friction between technology can supersede people. Oh no, we need people to understand technology, etc. How do you think things are changing like right now, Q1, Q2, 2026 on what you are raising for? how do you balance as somebody who's raising money, and at the same time, how do you balance as somebody who's determining, do I deploy money, on how well can the company or the founder articulate the role of money going towards technology and infrastructure versus the money going towards personnel?
Absolutely, Edgar. I think you hit the nail there. There are two types of companies that are raising money these days. Maybe more, but at least two that I can kind of qualify here. One is people that are developing pure software. Again, all AI based. I think if you don't have AI, then you don't have a play today, somewhere or the other. But they are developing that, and then the other kind who are using a lot of infrastructure money, right? So people that have to run these foundation models, which require hundreds of millions or billions of dollars of spend. But the first type, and I think at Rockfish we fall in the first category. We use very mid-level GPUs and all of that. So the spend on infrastructure is not as much. These are very purpose-built small language models or small models, if you will. Whereas if you are going to do a frontier model or a foundation model, what Meta just announced a new model this week, for example, and of course all the others that you mentioned, they need lots and lots and lots of infrastructure. So I think if you delineate these two categories, then in the first category, it's all people with a very small amount of infrastructure spend. In the second category, it is completely topsy-turvy from that. You're spending billions of dollars on infrastructure. And of course, there are companies that are paying hundreds of millions of dollars to people. That is a different story, like Meta, for example. But that is rare, right? That's not
So,
the norm.
so I'm gonna go and put something in here that has just been in the back of my mind for months and a number of other guest conversations that is here. What is your take from your experience on scarcity of technological advantage versus scarcity of personnel capability? And how does that play into raising capital or cutting a check? That to me is just unanswered question, and I think it's been that way for decades.
Yeah, very interesting question. I think there are, I see about two or three types of companies as well, right? There are companies that come up with fundamental innovation. It is groundbreaking. They are really moving the frontier forward in this case. I think for them, the people that have the right knowledge and the right ability to innovate and stay on the cutting edge is very critical. And these are the companies, again, that come out of, examples that come out of really world-class institutions, universities. Right? We were, for example, Rockfish, we were part of creative destruction lab out at the University of Toronto's Rotman School. And we can see that a lot of companies that part of that come up with those level of innovation. And our technology also came out of Carnegie Mellon University, where my co-founders are pushing the envelope right away. So I feel that in that case, it is the people with deep knowledge, deep expertise, deep tech that comes into play. There is the other extreme is people that are leveraging existing technologies and matching things together and bringing a product to market.
Yeah.
Nothing wrong with that. They are actually satisfying a need in the market. They are smart enough to say, hey, I have all these tools. I can put A and B and C together, and all of a sudden, here is something nice. That does not require a lot of talent from a technology standpoint from the people, but it's more knowing what to use, how to use, and how to patch it together and understanding customer needs, which is also a key piece. And then there is something in between where you are leveraging technology, obviously, but you do have people that understand deep down the stack. That way, you can build a more differentiated and build a moat. The second category of patching things together, you have no moat. Anybody can do it very quickly. So the first and third category are where you can create a sustaining barrier to entry and competitive advantage and so on. That's where I feel a lot of the talent that people have with understanding deep technology level can play a big role in making that happen.
So this is an interesting piece because what I'm actually going and hearing from you, and I think this is important. Like I hate use of averages or top of market for any kind of justification, but I heard a nuance in what you were going and talking about, which is it's actually the interplay between the person and the technology when you're going and making the investment. Do you have the right people for this technology versus we have smart people, we have educated people, etc., or we have leading edge technology? But if you don't have the right match of technology and people, and something I think I remember on one of the earlier guests that we went and had is, would you rather have a B product and an A team or an A product and a B team? And what you're actually going and saying is, can the A team turn the B product into an A product? Because otherwise, why are they even working on the B product? And I think that to me is a nuance that is sometimes missed. And that's something I'm just kind of realizing out loud listening to you.
Yeah, no, very interesting, Edgar. I think you're analyzing that, in a beautiful way there. I think, if you look at, I also look at the knowledge or technology as two ways, right? One is knowledge of the technology stack, if you will, knowing the the nuts and bolts of the technology. And then the second is the domain knowledge. Because end of the day, you're building a product for a particular application, whether it is telecommunication, cybersecurity, supply chain, manufacturing, whatever, financial services, whatever that might be. I think understanding the domain is also very critical in this. So, you can build a great product which may not be very domain specific or may not be really, really a good fit for the domain or understanding the domain. I think what you're alluding to, maybe there are two dimensions there, and somebody who can go on both those dimensions, they're the ones who can make a B product into an A caliber application,
Yeah.
right, if you will. So I think that is very key as well.
Well, it's interesting because, I looked at your career, and one of the things that I found was interesting is that you have worked in companies that have had to either scale new technology or have had to respond to what I would say is technological change faster than the leadership and the board would like. And I had a very sobering conversation a few weeks ago when somebody, went articulated to me how fast Anthropic was growing. And it's like, it didn't exist 5 years ago. So my question for you is, in today's change, how long is long enough in a forecast? And how short is too short in a forecast for a company? And a little bit extra there, are we biasing ourselves in what we expect by these hyperscaling AI companies?
Wow, that's a very loaded question, Edgar. Let me try my best in
Thank
answering.
you.
So on one side, you have companies developing products, and now to something that you mentioned earlier as well. You can develop these products with a very small team. You don't need a large team anymore. In fact, investors are telling us that 10 people team is all you need today to build really good
Mm,
product, right? Given you have all these tools, everything that cloud offers or other models offer, you can leverage all of that. You don't need to do everything from scratch anymore. So small teams can kind of do this. However, the market that you're selling to, if you look at three markets, right? Enterprise market, consumer market, or something in between. The enterprise market sales cycles are still the same. Nothing has changed. You asked about what is constant. May not be in the last 20 years, but if you look at the last 5 years, or I call it BC, before ChatGPT, BC.
I use BC for before children, but
So to BC to now, right?
yeah.
AD is after DeepSeek or whatever you want to call it, right? Yeah. Yeah, whatever you want to use. I think the enterprise sales cycles are still the same. In fact, sometimes you feel like you'll be dying of natural cause trying to make a sale, right? So having said that, if you're trying to sell to an enterprise, whatever product that might be, it is taking long. Even though, to what you said earlier, the imperative from the board level and others are, hey, we have to adopt these technologies and all of that. However, by the time they figure out what works, what is really relevant, and how do they make it available to every person in the company, it does take a long time. On the other hand, Claude has done, or others in that area
Yeah.
have done, they are giving tools to developers who can adopt technology, in a nanosecond. If you're a smart developer today, which there are so many of them, they quickly sense and see and use the technology, and they can tell everybody around them, and they adopt it very quickly. The network effect is very quick. So it depends on who you're selling to. Consumers, I think, is in between. Many consumers, early adopters, are very quick at
Yeah.
adopting this. However, I was visiting my mom, 87 years old, last week, and she uses four devices at one time. She has a phone, an iPad, another phone for something else, and so on. And it is incredible how she has adopted these technologies over time. When she actually did not go to college, she went to work right after high school. But by the way, just an off
Please.
aside here, she worked for the Indian telephone company. Both my parents did, and I grew up literally watching them use the switchboard to connect
Mm-hmm.
calls, right? So you manually figure out, I need to make a call from city A to city B, and how do I do that? To where we are today, where my mom uses WhatsApp, and we communicate very quickly, and it's one click. But there are people that can adapt to these things rather quickly, which consumers we are seeing more and more. So every man, woman, and child has a smartphone, and you give them an app, they use it today. So selling an app is a lot easier today. Just send a QR code and people end up signing up. Whereas enterprise sales cycles are still the same. So depending on what you're making and selling, the customer matters a lot, and some things haven't changed, but how you do it has changed, and how you can scale has changed.
I love where this is going because I love working with B2B companies and two ways. One is for when you really get the match between what the market wants and what a company's selling. But the other side is getting to that reality check of what the market wants and what the company's going and selling. And what you're pointing to here on the B2B side especially is the psychology of allocating capital. Do we just keep allocating capital to the vendor that we already have? Or do we go and find a replacement? And I think what a lot of people forget is that the pain has to be so big with your incumbent for you to go and say, I'm going to go and rip out a bunch of stuff in the business to switch to the new one, which I think is that dynamic that is going on. And I think what AI is changing is it can just kind of generally increasingly start coming on top of it. But I think that psychology of capital allocation, whether it is a team buying or reviewing a contract from a vendor. Yeah, it's like, oh, we'd love to buy a product, but we're locked in for another 2.5 years with our existing vendor. Like, you need to give us like a huge justification for why we should cancel that contract or run alongside. What are you noticing is there on the psychology of capital raise or capital allocation that is maybe being missed by both people looking to raise money, but also being missed by people looking to deploy money?
I think let me address the deployment part first. As we have seen, most innovation don't come from large companies today,
Mm-hmm.
especially very very relevant innovation. So they do come from startups and smaller companies. I think that continues to be true, and I think that continues to be even more the case. And that has actually propelled most of these buyers to look at smaller vendors, because if they want to stay on the innovation curve, they have to go and look at these technologies, because the old adage of you won't get fired for buying stuff from IBM, it's not true anymore, right? IBM gives you
Yes.
certain things, but you have to look at other technologies, other companies, and bring them in as needed. And we have seen that play out. I mean, OpenAI was a startup not too long ago. Cloud, as you mentioned, 5 years ago, they started off. Even though they have all grown quickly, given their positioning, ability, and what they've really shown. But however, that it did put Google on notice, right? When ChatGPT came out, Google realized they have to really amp up their game, and you saw them do that, and they are capable of doing it. Many other companies were not capable, and they would have kind of gone by the wayside. So from a deployment point of view, I feel companies are not at all reluctant to look at new technologies, and as long as it is, as you said, it is an order of magnitude value add, right? Whether it's giving them more revenue, it's cutting the cost significantly, or it's making their customer experience better, or employee experience better, or mitigates their risk significantly. And we see that in cybersecurity, we see that in telecom. Maybe if I touch on telecom a bit,
Please.
telecom operators were very cautious, I should say, and which means they took time to bring in a new technology. So they used to buy primarily from companies like Ericsson and Nokia and others. But now, in the past 4 or 5 years, I see a complete tone shift. We were part of Deutsche Telekom's T Challenge. They selected 12 companies, innovation companies. We actually were given the third prize award there a couple of years ago. We see that right from the board to CTO to everybody else, they are very open to looking at what is out there, their own prism of looking and seeing what fits their needs, and then they are not shy to work with startups. That shift is phenomenal. If you look at 25 years ago, when we used to sell to telcos, they would not even look at a startup much harder. The bar was so high at that point. But today it's very different. So, and then they're also, their investment teams are very much interested in investing in these companies. In fact, if you look at AT&T, AT&T Ventures has invested in a number of startups that they work with, and that goes the same for other telecom operators as well. So in terms of deployment, they are actually not shy at all. Investment point of view, I think sky is the limit, Edgar. I think people are looking for, I think what you touched on, what you mentioned earlier, people are looking for really good people to invest in. That is number one. They know that if you're really good, you are likely to build a good product and good technology that goes with it. So people are not shy at all. I think I see investors scouting. For example, we had an event, the Carnegie Mellon University had an event called Lab to Market last
Yeah.
month. It involved a lot of founders, would-be founders, entrepreneurs, and investors. And they're really looking for, hey, this is an area that's of interest to us. Are you building something in it? Do you have a background? Do you have the underlying capability to do it? So I think both sides are true. Innovation comes primarily from this, and it helps companies like us, right, where we can innovate. We have people that are supporting us from an investment point of view.
So it's so good because I actually want to lean into the psychology of capital raise or capital deployment a bit more, because one of the things I found was fascinating is that you've spent more than 2 decades in quite active nonprofit involvement. Look, let's be frank. It's another form of capital raise, right?
Yes.
It's instead of trying to go and raise money for a business or an idea that might be commercialized, a nonprofit is just another form of a cause. And if that pisses off some people, well, sorry, but it's true. So I have a question for you, because I think that you can get to really kind of having almost like these blinders on just trying to go and raise money to fund companies or trying to go and deploy money into a specific industry. What is something that was eye-opening or maybe sobering or a competitive advantage from the fact that you've spent over 2 decades in nonprofits, charitable, fundraising initiatives that had nothing to do with your own personal gains from it?
Yeah, I spent more than 20 years, helped raise more than $100 million for three nonprofits, right? One in education, one in healthcare, one in child services. I think it's fascinating. My take is people are ready, willing, and able to give money for nonprofits. And the main reason is they want to see an impact. They want to see an effect. They want to see a change. I think which cannot be done in a commercial endeavor. Many of these aspects are not taken up by a commercial because there is no incentive structure or there is no real aspect for a commercial company or a return in this because these returns are not measured in money. They are measured in social capital or other means, right? And just want to also just quickly touch on that. There are a lot of companies that tried impact investing and benefit corporations and all of that. And my personal opinion is it doesn't work. It's one or the other. Either you have a commercial enterprise, you are maximizing profit, increasing shareholder return in terms of dollar amount, right? That is what capitalist environment is. The nonprofit side is all about maximizing, again, some sort of return. It is not money, but it's some sort of social effect that you see. Now, the world improves. When we say we all want to make the world a little better, here it's seeing that world a little better in a different metric, and for each nonprofit, that metric is different. I've worked with one organization which is bringing eye care, free to everybody and making everybody see, which right immediately doesn't translate into dollar amount, right? Dollar doesn't come out of your eyes, but it is improving the lives of so many people, which is going to make such a big impact. So I think it's one or the other. And the people that are deploying money and giving to nonprofits are, hey, I have this money, but I want to see a change. I want to make this world better. And they are looking for organizations that can do this well, that can make sure that your money is spent well. And you see that too, we call it donor stewardship, where whatever you spend, I can see that effect is, it's a full circle. I can see that the result. Of course, there is all these things about legacy and name and all of that stuff that people want to leave. But I think more importantly, they do it because they want to see that change and they see an organization that is able to make that happen for them, and they continue to give. My last organization that I was volunteering with, IIT Madras Foundation, is building an endowment for IIT Madras, and we realized that it is a long game. The first time somebody gives money is not the only time. Now, if you make sure that they see value in what they give, they continue to give more and more and more, and they tell others that you should do. And that is incredible. That effect that you can see is like, spreading like wildfire. Sorry, California, we always have analogies of wildfire. But
So what is something then that you have gotten from those 20 plus years that you weave into when you're either raising capital or deploying capital that you think others might not get that same wisdom from? How has
totally.
being involved with nonprofits helped you there?
Totally. And I see nonprofit, three P's. One is purpose. Second P is, passion. And third P is people. I think that's the reason why I've been involved. It's about purpose. I mean, we all got opportunities in life that sounded really implausible. If I look back, 45, 50 years ago in my life, I never thought I'll be where I am. I think that gratified aspect comes into play. And then can we make that happen for others? I think there is a passion to make that change. Second is, the purpose to make that change. And the second is passion, which when you look at a nonprofit that you want to work with, you connect with something there, something personal, something that you want to see because you have experienced it firsthand or somebody that close to you experienced it. That brings that passion in you. And third is it's all about people. Every nonprofit that I've worked with a lot of people, volunteers are, as you know well, their mindset is very different. They're doing something that they just don't have to do, but they still, wake up, slog it, do it more than they take ownership and they do it more than what they would do at, their own work. That aspect of it is just incredible, right? When you're with such people that think of everything beyond themselves, it's not for themselves at all. And at IIT Madras Foundation, we want people to give three T's, right? It's time, talent, and treasure. We need people to give one or more of that, and
Yeah.
many people give all three. When you see that, it is very gratifying. And when you see the results, when you see the outcome, when you see the impact, when you see what effect you can make, Edgar, it's just, it is very addictive.
It's interesting. I look at where I started 30 minutes ago versus where I am now. And, we talked about the juxtaposition between technology and people, but I think it ultimately goes to what type of people. And I think going and looking at the role of nonprofit, what else are you involved in? I think matters, right? Because we sometimes, I think, over romanticize people that are fully obsessed on one thing. We appreciate it, but we can't have a world of people like those. But it's good to have some like that, just not everybody like that. At the same time, if there's people that are just constantly giving everything, then they're self-sacrificial. And I think it's just that balancing act of humanity that's there. This has been enlightening to kind of listen to you and weave through, I think, what you've experienced as technological disruption to technological chaos in your career. So thank you for giving us the little dipstick in 2026 as to what it's like for you and your professional experience to go through this. Appreciate you having you on.
Thank you. It's a pleasure, Edgar. Thank you so much. Wonderful.
All right, I went and was just thinking through, like, especially that last portion of it, right? What are all of these unasked due diligence questions that people actually think through when they're interacting, both with people looking to raise money, but also with people looking to deploy? Like, I just went to just took a look at it. It's like, what else is this person doing? What else are they involved in, right? And those aren't on a due diligence checklist. So that was like a big aha that I had from listening to you. So thank you for that. What about you? What was your takeaway from this 30 minutes?
I think, the last thing that you mentioned, Edgar, technology disruption to technology chaos. I think that is very interesting what you mentioned. I think for me, the takeaway from there is people are creating something from chaos. It's the reverse that they're trying to do, right? So what you mentioned, I think resonates a lot where there is so much chaos today. I mean, if you look at a pharmaceutical company or company that is not exactly in AI directly.
Yeah.
However, they are seeing a lot of chaos out there. If you're a scientist working in one of these companies, and then at the same time, they also know that I have to use this technology. So how do they go from that chaotic, noise all around you and the buzz all around you to using it to make your job better or your company better? I think to what you said for me, that's a huge takeaway. Actually, that's an opportunity that people have.
Thank you. It's interesting because it's something that I've been kind of just going and observing here, and as somebody with a I think at times confusing math bent in terms of my personal background, I gotta kind of be very very careful of how I use some of these terminology because chaos well governed allows you to go and achieve a lot of things, but I think a lot of people don't think about it this way, and I'm not actually the biggest fan of technological disruption because to me that is actually more harmful than chaos. And it kind of goes to what you were going and saying, like you can do something with chaos, but I think with disruption I think there's a greater cost.
Mhm.
There's almost like a schism when it comes to disruption as opposed to with chaos. It's like, well, you could walk away from it, but it's hard to walk away from disruption. I don't know. That's kind of like my philosophical bent coming here as well. What's your take?
No, very interesting. Of course, this kind of goes to what the world is grappling with, right? Is AI good for us, or is it should we regulate it and so on? Um, uh, I think it sort of goes into that aspect, right? Because like any technology, you can use it for good purpose and make it work for everybody, or work for some people, if not everyone. Or you can use it for very destructive purposes. Like, for example, you can use AI to spam or do all kinds of stuff, with at zero cost and at high volume and high velocity. Um, how do you kind of look at it, and where do you put the regulation, right?
Yeah.
All the politics aside, if you were to look at, in fact, just last week I was in India and talking to one of the top AI folks. He's a professor and runs the School of AI at IIT Madras, and he's part of the government committee on responsible AI and regulating and all that. So the conversation kind of goes in the same area, right? How far do you go? What is that wedge which will keep us safe at the same time create opportunities, right? What is that
Mm-hmm.
fine line between the two? And I think in a way, what you mentioned, Edgar, is kind of falls into that. The way I look at it, I guess the jury is still out. It almost seems like people have very divided opinions on it. Do we learn from experience? I guess we have to feel our way through. In my opinion, in my humble opinion, we have to feel our way through and see where we land when we make certain actions, and then take some corrective measures and so on, as opposed to being able to do this well. I mean, if you look at the U.S. Constitution, 250 years ago, they were able to foresee this quite well, right? The
Mm-hmm.
framers. incredible. I mean, if you look at 250 years ago, can you create a constitution that can last well this long? Of course, there are amendments along the way, but that is one of those massively brilliant endeavors, right, ever done, in
Well,
light of it. Can you
I
do the
think
same
you're
at AI? I don't know.
well, it's an interesting piece because what you're pointing to, we hold these truths to be self-evident, right? And I think that's what can go and have something that lasts 2.5 centuries and longer.
Correct.
And I think what you're going and pointing to is one of the struggles with AI today, because look, from my take, it's extremely powerful, but it's very hard for it to be grounded in truth
Right.
because it's grounded in probability, and there's only so much you can mask statistics. And this is somebody with a math background talking. So this has been enlightening. I've really appreciated where this conversation went, Girish. Thank you so much.
Edgar, likewise. Really appreciate it. Thank you for the very insightful discussion here. Appreciate it.
Perfect.